All right. Good morning, traders. You should see my screen, hear my voice. You should be able to talk to me, talk to each other. Does the sound seem normal? That's my first question. My daughter is here. She has her last couple of projects from college, and she needed to change my microphone settings for a weird project. So sounds normal. I don't know. My normal self. Like there's no echo. There's no like extra background noise or anything like that. Loud and clear. Good enough. Good enough. Good morning to you, Doug. Good morning, Don, Peter. Good to see you guys. Good morning, LJ Go. Good Wednesday morning to you, Kent. Thank you. Yeah, let's go. We've got a good group. I expect more to come, but welcome out to the Options Income Launchpad Wednesday Market Midpoint. I'm Scott. I'll be your host. This is for education and illustrative purposes only. Nothing we do should be considered a recommendation to buy or sell any security or financial product. We're not brokers or advisors, and therefore don't give anything construed as personalized investment advice. Any decisions you make should be done so at your own risk. Yada yada yada. Okay, let's go. A good open. We'll talk about the open. Let's check in on our posture. Is it continuing to show strength? Is it starting to show signs of concern or weakness? We'll just look at those a little bit. Of course, go through our trades. I was a little worried because I had one that I was we were looking at TSM. I was like, didn't quite get the signal I wanted. I'm looking at it this morning. It's looking pretty good. Section 4. At any given time, if you're working on your trading plan and you get stumped or you're like, gosh, I'd like some, feel free to ever bring it up in the group or just to remind everyone. I hope everyone's still riding the loop with us, making improvements to their trading plan, even just small marginal improvements. They make a big difference. Okay, good morning, Jamie. Good to see you. Okay, so here's what I'm looking at. You can see we've got the cross. We've got it jumped. I wanted it above. These you can see. Yes, let me zoom in. Let me zoom in. Let me get drawing tools. So I was looking at this, thinking, yeah, that's all I need. If the buyers can get it above that, that's going to get the turn. Didn't end up happening. What ended up happening yesterday? Doji. It finished just sort of right in line here. So what am I doing now? I'm saying, well, then I needed to get above yesterday's high was 370.75. The previous day's 370.07. I actually would be okay even if it was not quite, but at this point, yeah. If it holds like this or gets a little better, even that would help. If it looks like this, I would be thinking that's what I was looking for. Now, at that point, I wouldn't necessarily have to have a stop way down here. I don't know why am I drawing. I could think about a stop maybe somewhere in here instead. So that would be kind of the zone I'm looking at for a stop loss. And then what am I looking for a move? I'm looking for another one of these. Maybe not the entire thing. I'm not like I want it to go from this to this, but probably Yeah, starting around this level here and getting up into here, which is about, let's go see. Oh, hold on. I've got an error. I think. Uh, oh, come on. All of a sudden my Thinkorswim is, hold on. I have to reset this thing. All right, guys, give me 1 second here. To close this. I gotta restart it. Hold on. Okay. Sorry. Did not realize. I did not realize that my Thinkorswim had stalled out on me this morning. Good morning to you, Victor. Good morning, Vladimir. Good to see you both. All right. That's reloading. Let's just kind of pop through here for a minute. What's on the headlines? That's a fun photo of those two with their arms crossed, looking serious. Best Buy. Okay. Um, stock futures rise after Trump bumps the truce. That's really about it by way of headlines, per se. Here is the economic calendar. Nothing scheduled for today, jobless claim. So we're really just sort of a little bit like, all right, what's going to move this market? We do have, oh, there we go. I've got charts back up here. So let me bring this over. And it's just going to be perfect. And we go back to TSM. Oh, no, it's not. I had it zoomed in. No, I don't remember how I had it. All right, never mind. Okay. Yeah, that candle right there looks right. Oh, let's load. That's what it was. Let me get my studies. And was that it? Pretty close. Pretty close. Yeah, you can see what do we have? Stochastics is turning. We had that nice push. We have a little pullback starting to turn out of it. What's the trade I'm thinking about on this one? I actually have it, I believe, already dialed in. Let me see if that's true or not. Huh? No, I thought I did. Huh. That's weird. Reset. All right, fair enough. Um, Volatility on TSM. Let's get this to 6-month daily. Volatility is not outrageously high, but it's mid. Low is down here in the 30s. High is up here in the 50s. We're in the 45, 47 area. It is a $400 stock. So I was looking at it was either a 370 by, I think it was a 370 by 380. A little more aggressive would be a 380 by 390. Bull call spread. Bull call spread. Um, yeah, let's look around, but maybe we'll come back to that and see the way that, like, look at that, how that's setting up. Let's go into the SPY. The SPY yesterday had a bearish day, not a hugely bearish day. It ended up being an engulfing day, but without much volume. Um, Decent relative to the last 10 days, nowhere near average. And today you can see we're right back up. Now, on the market, it's like, well, do we consider this like we're bouncing and now this thing's ready to make a whole nother move? I don't see that in these charts. Let's this thing is still in this consolidation, which could easily just come back down towards the bottom of it, or even keep coming down towards some older level. That would still be bullish. That's the thing, right? Is we're not like, oh, it's falling. Of course it's falling. Look how far it just ran. That's it. That's the market exhaling a little bit. And then it can breathe in again. And so, could it be just a very small consolidation and then it pops? I think most of us would have a skepticism, right? We would say, well, do we have like news and fundamentals that supports a crash up, which is what we seem to have here, right? You've heard that term before, a crash up. Um, so earnings is the news of what we're seeing now for sure. Hi Sandy, good to see you. Bull flag. Yeah, I think that's the thought process right now. Bull flag. What is a bull flag be? It means we had a good steep precursor move, and that now we see a mild retracement, 2 to 4 days, pretty tight. That's a continuation pattern. It does require it to break out of the upside. Now, that's always my first bullish check. If something is moving strongly bullishly, I would expect to see flags where it's like it goes up for 6 to 8 days, consolidates for 2 or 3, then does it again. That's a strong bullish trend. But other times I would also expect that it just has a normal pullback where it goes up for 8, 9 days and then it pulls back for 5 days. I want to make sure that either way it goes, I'm ready for it. So you can see I kind of have a flag there, and then it sort of pinches in, because if it goes too long, we're not going to consider it a flag anymore, and we would then think, well, now it's likely to just sort of pull back. Interestingly, if you're a Fibonacci person, if you're a Fibonacci person, you would be like, oh, well, a 19% retracement, or excuse me, 22%. I can't remember the first numbers now. Would maybe be Fibonaccian. Yeah, I'm gonna let's see if I can't. Now, here's the thing too: is if you did do Fibonacci's, you have to decide: am I drawing from here to here, or am I drawing from here to here? Because that would have a huge difference. You know what? I'm going to show you that for anyone who's ever been interested. Let me go to my drawings. Let's get some Fibonacci retracements. So if I go here, you can see this is kind of like what a standard flag type thing would look like. Shorted. Oh, yes, that's exactly what it is, Peter. It is 100%, and that's what's exactly been happening. Is it's very thin in its trading. There's not a lot of sellers other than short sellers. There's been a lot of short sellers, and then the short sellers have been getting pinched. We'll go look at it for sure. But it's 100% another quote unquote meme stock, like GME for sure. Well, without a doubt. Now you can see the flag then is it's 22%. Yeah, so there's the first retracement there, and then another one is here, and that's about where we have our bounce. So this is why people think they're magic. I mean, look, first thing I'm looking for is a flag. That's this retracement. Then a bounce. That could be around this 60 to 50, the 38 to 50%. Beyond that, I start to get more skeptical, right? More than a 50% retracement. Then I'm like, ooh, this is a little deep. But that last piece of hope is right there at the 62. Now, if I were to draw this again, someone else might say, whoops, I'm going to the wrong drawing tools. Remove Fibonacci. Yes. Okay. Now, if I go from here, whoops, nope. If I go from here, it's a very different story. And you could make the argument, look at your stochastics. That's all one move. You're not going to find them as effective there, if you ask me. I believe you need to cut it in half and start from this one if you're going to use the fibs, because that's a more standard expectation of what might come next. I mean, look at this. Yeah, for sure. It looks even more ridiculous than I thought when I draw it out. Let's oops. Remove that drawing. Okay. All right. Car. Yeah, it is. Let's see what this thing looks like. Oh, goodness. I mean, the good news is this is kind of feels like a blow off top. There's gotta be some measure of profit taking followed by a new wave of short selling that would bring this thing back down. Yeah. Here's what I would say, Peter. Your explanation, saying I can ride this out. I would be curious if you said my stop is at 850, let's say, right above the high of this. You shorted at 712, which is here. And as you look at this, There's a very good chance that's right up in there. And this thing, comes comes back down. And imagine these are red, comes back down, right? Like that, like I think we can all see a shark frenzy like this, but Peter's really kind of stress testing this the right way. What can you handle? That's a 138 loss per share. That's nasty. Um, but if it drops down to 400, that's 300 gained. So even looking at the extreme of that high, it has it. It's just like what kind of a pain threshold comes in relation to that. Peter, you're talking about it and thinking about it the right way as far as what can you ride out. It's definitely, and you can see already it's turning red on us now. That could be it, and you might have just sat through the worst part of it here together with us. I don't let me let's go in. Oh God, that's a very much a look how much of a blow off. That's a 40-point shadow. Which even on I mean that's 5%. That's a 40-point shadow on a 5-minute candle. Um and you're already back down 30 from where you gave your comment 6 minutes ago. So yes, meme stock, it's a roller coaster. Be thinking like maybe you look at this and you think, you know what, I don't think I would need to wait until up here. Maybe you now see this and then you kind of say, I'm going to go above not the highest candle, but that second one, because if it does that, maybe that would make it a little bit easier. But this thing is likely to whip around for sure. But it does seem to be, at least showing signs of exhaustion. And anyway, best of luck, sir. All right. What else? Let's go look at the VIX for a minute here. Check in there. Does that support what we see happening here? Oh, yeah. Okay. So very similar. We definitely had this bounce up that we were talking about. Are we convinced it's rolled over yet? No. No, for me, it's got to close below there for this to be the high. For me to think that's it. Because right now, this is just sort of like sitting in that same zone. At the end of the day, it could be here. For all we know, it's not convinced us yet. Hertz is Hertz in a similar spot as Avis. Yeah, so we're very close. We seem to be, and again, especially as you see this thing test, but not even really get too close. That jump was representative of where there was a meaningful and clearly evident shift in institutional mindset in a positive way, for sure. Okay, let's go get a look at Hertz for the short squeeze. Well, I think it already was squoze, right? I think that it was down here around 4, and then the squeeze really kicked into gear right there. Right, you kind of had this old level around 5 to 5.5, and right at that point is when you got like a big shot, and it got all the way up. The volume was there, and then you can just see it was just there's just this panic up, and it got all the way up to 8. Now it's rolling over. Yeah, I mean, honestly, when there was the first time we had the wave of beam stocks, I watched. I was running a group. We watched. We didn't. I never really trade those things personally. There's just so much whipsaw. Um, always some pearl clutching. Okay, so yeah, but I mean, look, same kind of a thing. What would you think here? Well, if I took this now at 7, if I thought this was the end, well, I could take about $1.30 of risk. And if it goes all the way back down to 4, that's $1.30 for 7. I mean, that's in the realm of what we do. So, it's hard. You might get caught into liquidity issues of how, am I able to get out? Is there, you know, what do I think of Cisco? Let's go take a look. But if you trade these, please keep us posted. Um, for sure. All right. Let's go to Cisco. Yeah, I think, if you happen to get in, this is when we were looking at after it moved up, it pulled back, and through here you had this, and even if you entered late, it's still on day 4 after that. What would my thought be on this one now? If you're in it, my thought would be I'm starting to think about, if I haven't yet, taking some profits. I'm thinking about tightening my stop loss. Of like, hey, where am I wrong now? At this point, this thing's, you could certainly make a shift to the Heiken Ashi candles. At this point, 4 days in, I would be dropping down to the 4 hours. So right now, let's mark it. Let's mark it. So right now, there around 87 or so is the well, that would be at the end of today. Right now, we would still be functioning off of yesterday. So we'll put one there. So where is it? Where could we move it to? Versus oh, I thought I was going to be able to do that. Let me. So about 85.60, moving it up to 87 at the end of today. Now, let's zoom in, and I want to aggregate equities. Yeah, much cleaner. And let's zoom in here. Now these numbers, these colors don't make sense anymore. But let us make sure that we delete this. Now I would have a stop here. So remember where we were. We were around, if you're using the dailies, this is a great uh, chart to show when and why we would shift from a daily Heiken Ashi to a 4 hour Heiken Ashi. And this is a great technique for swing trades when you've got 4 or 5 days of good price action in a row. There's a good chance you're moving to the second half of that trade. Stage 3 of a trade, that's momentum. I have early and late stage momentum. I would say that puts us late momentum, nearing completion, which is stage 4, nearing completion. My trade management considerations shift depending on what stage a trade's on. There's actually a in the trading found, no, what is it? There's the trading course A basic, not the options, but the basic trading course. One of the modules goes into this stages of a trade. Stage one, pre-trade. That's all the work we do before we pull the trigger. Does it meet our rules? What's our stop? What's our target? What's our reward to risk? What's our option? How many contracts, right? Everything we do before you actually hit confirm and send is stage one. Stage two, waiting to develop. You pull the trigger, you're expecting something to happen, and then you get patient. What are we watching for in stage two? We're watching to see, does it shift into stage three and we're now into momentum, or do we need to try to cut our losses short? That's a key objective in stage two, is recognizing if a trade goes wrong in order to cut the loss short. But we don't want to be disruptive. We've had plenty of really strong trades go through what we call a hiccup. It pops a little and then drops, and then you're like, well, it dropped, but did it break support? Is it wrong? Or did it just hiccup? Those are the types of discussions and questions we have during stage two. We don't often say, oh, this is stage two, we're having this, but that's a good thing to sometimes just check in on and say, all right, let's orient ourselves with where we are in the trade, and then what thought process that would generate as a result. Well, if it catches a Heikin Ashi like this one did on the daily, that's moving me into stage three, early stage three. In fact, this right here, now you can see this one, it was white, but there's a little shadow. There was kind of a big upper shadow. But this one, that's a momentum candle. Boom, 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 4 in a row. Now, on this first one, I'm going to say to myself, that's it. I'm now in momentum, stage three. What does that mean I could do? Well, if I had a stop loss underneath these red candles, now I could say, oh, you know what? I'm going to put my stop here now. And I've just taken all of that risk out of the trade. Entered on 417. No. Wrong. Not, how could that possibly be wrong? You entered on the momentum day. Now, what does that mean, Don? I mean, I would characterize that trade as more of a continuation trade than a bounce trade. Not a huge difference. A bounce trade, I'm trying to catch it right as it's hitting support, and I'm typically going to have stop losses below those reds. Continuation trade, I'm saying, hey, this thing's just, look at this beautiful momentum candle. Is that wrong? No, it's beautiful because look at that. But you would have you wouldn't have a stop loss way down below. You would have one maybe at the top red line, and then you would have the ability to say, on each subsequent day, you could then say, I'm now going to move my stop, and then move my stop, and then move my stop. And right now, your stop would be a little above 85. That's nice, especially if you started back there. But it's pretty far away. You're $5 away. Is it as close as you would want to be? And that's where I'm saying, if we're now on the 4th day in a row, we've moved from early momentum to late momentum. I would have to imagine, that there's targets set up in these low 90s somewhere. Maybe you're starting to book some gains and let the rest run. But this is where I say I can now shift my stop loss to a 4 hours chart. And the 4 hour, you can see I have 1, 2, 3, 4, 5, 6, 7, 8, 9 of these in a row, not 4, 9. And so right now I would have my stop at 87.50. And then later this afternoon, we're going to get a new one of these, right? You get 2 a day. So we're going to get another one, and it's going to start here. We know that because that's how Heikin Ashi works. The next candle always starts right at the midpoint of the previous candle body. So then this one comes into play, and then I have my stop here. Where's that? 88.50. And then if tomorrow morning it's still going, I'll get a new one. There's the halfway point. There's the new candle. Yes. Then my stop can move here. And now my stop is at 89.20. And you're just, maybe you get to a point where you say, hey, if it gets to 90, I'm going to take all but X amount off. And then I'll put a trail stop on. These are the trade management discussions, right? What I have found is that, and it came from a pursuit of a stop loss, right? I was like, well, there's got to be a better way to do stop losses, because like everyone else, there would just, sometimes it's too tight and I get picked off, and then it would be too loose and it wasn't protecting me. And it's like, and I was looking at indicators. People use things like moving averages, parabolic stop and reverse. They use ATR, and there's all these things. And what I realized is I was looking for a formula to the stop loss. But the problem is, like most everything else, it's contextual. My stop loss, when I first evaluate the trade in my pre-trade, and the stop loss that I start with is not going to be my stop loss when I shift into early momentum. It's not going to, the distance and where it is and what its objective is. And when I get into late stage 3, it's a different objective. How tight, how much risk am I willing to take? Because think about it. As I move from early to mid or early to late, what's happening? I'm getting closer to my target. Don's target says, he said, it's 91.25. That's $1.07 away. So if there's $1.07 to make, and his stop is at 85, which is the daily Heiken Ashi from yesterday, then he's risking $5 to make that last $1.07. Did you guys see me pause for dramatic impact? Did it work? Did it feel dramatic? I don't want to risk 5 to make 1. Don doesn't want to risk 5 to make 1. If I was like, hey, everybody, I've got this amazing trade I want to show you. You risk 5, and if you're right, you'll make $1. You guys would be like, who is this guy, and what did he do with Scott? We don't risk 5 to make 1. That's just not. But that is what happens in trade management. In fact, I tell people, late stage 3 and then moving into stage 4. Stage 4 is nearing completion. Dawn is nearing completion. There's only $1 left. How much risk do we want to take to get that last $1? Well, I'm not like, oh, I'm risking 1 to make 1, or option sellers. Well, now it's a different prospect if that's the case, right? Because now you're talking about like a probability model where you're saying, hey, I'm going to sell out of the money. In order for it to get to me, it's got to break support. You're right. There's, I mean, if I do it's a funny thing. They'll call them high probability credit spreads, which makes them enticing. People are like, ooh, high probability. I want to get me some of that. Right. But, it comes with a heavy burden of risk, where you're risking 9 to make 1. That's the cost of probability. It's I've seen it. I've been, if you didn't see Kyle's comment, 1% loss can wipe out an account. I've been a live participant, right? I'm working with them, and they're like, oh, this guy has a newsletter. He's been right 38 times in a row. Then we're working, and it's 39, and then it's 40, and then it's 41. Okay. I'm like, look, you got to watch your position size. And I'm going through these things, and it's going in one ear out the other. He's just thinking that this guy's right 42 times in a row. What the hell does Scott know? He's not right 42 times in a row. He's right. I don't think I've ever been right 42 times. I can't think of a time I've been right 42 times in a row. And then there was just this Friday, some bad news. I can't even remember the stock now. And the stock just whoom, right on the last day. This thing was like making, it was pretty close to making most of the money. And then the last day, it just wiped out. And it was like catastrophic. Catastrophic. Wiped. I mean, it was like a 120K loss, like to make 3 or 4 grand. Anyways, yeah, no. I hope that this helps see. So now uh for Dawn, he might be thinking, okay, I can definitely have a stop at 87.50. I'm only risking $1.50 to make that last dollar, and momentum is on my side. I don't mind a little bit of an inverted skew. 1.5 to 1 when momentum's on my side and I'm getting close. That feels like that's what it's going to be. You got to be willing to take some risk. And this thing is continuing to show the momentum. And I know that later this afternoon, I'll be able to move that stop up again to 88.40. And then all of a sudden now I'm only risking 80 cents for the last dollar. And it's going to continue to move in my favor until either A, I get the last dollar, or B, it hits a tightened stop. That feels right at the end of a trade for me. That's how I like to do it. Is it gets tighter, I start taking less risk because there's less left on the table. I want to get all of it if possible. Anyway, all right, let's keep going. Hopefully that was helpful. A good chat of trade management thought processes and techniques. The right chat. Netflix. Look at Netflix. Oh yeah, that one is a wipeout. Yeah. Okay. Let's see. Okay, so we got it, and there's a hiccup here, right? There was a hiccup here on Vodafone, but it didn't break support per se on this, and it's holding on. We'll see if this thing recovers. Let's go up at the top. Alcoa is one. The couple of people talked about maybe entered. I'm a little nervous of these little candles like this as this volume drops, that it's not going to get all the way up. So if this is one you took, be careful that it doesn't, transition back there. Apple, Archer Daniels, Applied Materials. I just can't get a good read on it. It gaps up, sells off, looks like it's going to turn, gaps up, sells off a little. Maybe that's a tough one. AMKR overextended still, Amazon overextended still, and we're getting close to the earnings. Amazon is next week, early week from today, actually, middle of the week from today. APH, a week from today, pulling back. ASX, man, it's done a whole nother $4. We got the first 4 and 4.5, and then it got 4 more. So, nothing you could do. AXP earnings are tomorrow before market, so we'll see what happens there. Baba's looking close. Nice move up, pulling back. You can see that the selling is starting to dissipate. I think this one could emerge. Bank of America, very close. Very, very close. Is Stephen D here today? I don't know if he is. He's not. Stephen D loves trading Bank of America. Yeah, this looks like a nice setup here. I'm looking at that. BCS has earnings soon. Citi is just barely starting to turn. So Bank of America is a little ahead in its cycle. Let's see. Caterpillar. I don't know if anyone else has been watching, but for me, Caterpillar continues to have really um, um, compelling, I guess. Okay, CF, CIEN pulling back, coherent. Overextended. Cisco, we already talked about, almost coming to an end potentially. Delta setting up. I think Delta is this is, it's been chopping around a little bit, but you can see that post earnings they got back up and then some, a little higher than the initial earnings bump. Now it's pulling back in a more sustainable fashion. I definitely think there's a potential trade developing here. In with a 76 target the next time it makes a run, at least maybe even a new high. Consumer discretionary continuing to show improvement as a group. I gotta say, it's certainly oh, that's a great point, Gabe. I actually read a thing that was saying um planes are gonna start, really having fuel shortages. Anyone heard that? Jet fuel shortages that will, yeah. Everyone's like, yeah, hell yeah, we heard that. Oh, that's a good point. Dow, look at GE getting smashed after earnings. Nobody likes what they see there. Virgin has already started to reduce services down under. Yeah. Gold pulling back. General Motors pulling back. Google. Oh, Google. Google. Are you trying to flag and give us something? I'd like a little Google pre-earnings trade, right, Kyle? It's, it's looking nice. I'm thinking about it. Let's put that on the short list, not the too short, the list that is not very long. HD, maybe on a pullback. No. Okay, so IBM had earnings this morning, I believe. $1.80. Oh no, it's aftermarket. Never mind. I did feel a little tepid. Intel. So this is one that Peter shorted, made some quick money on, and you can see he nailed it. Because it's just been kind of struggling. It looks like it's being sold, but it keeps gapping up and then selling back down and then gapping up and then selling back down, and actually hasn't gotten down to the previous. So now this is really looking more flag-ish than anything. However, as you can see down below, as you can see, earnings are tomorrow after market. IWM, whoops. Lumentum, no. Lamb Research is close. Implied volatility is high. Oh, wait, we have earnings. Is that today? Never mind. Aftermarket. Oh, we got to wait and see. Gotta wait and see. That's partially why the volatility is high. Let's keep an eye on it tomorrow and see if something materializes post earnings. MasterCard's pulling back now. MasterCard doesn't report for a week or so, but it is going to be influenced by AXP if there is a big announcement there. I like Meta. Oh yes. Meta maybe even more so than Google. Meta or Google both look like there's a pre-earnings trade possibly on deck. I'm definitely paying very close attention to both of those right now. TSM, obviously, we'll get to that. Monster, no. Marvell, overextended. Morgan Stanley, no. Microsoft, no. Micron, ooh, indeed, Kyle. Micron was one of our favored this week. We were watching this. This would indeed be the confirmation. Now, if I were to trade this, I am trading this as a broken flag. I am not putting my stop down below the bottom of this. I am treating where the flag broke as the level, which means my stop is going to be below that, but into this price action. So just kind of keep that in mind, right? It fails if it falls back into the flag. A flag is a different type of where are you wrong mentality. Does that make sense as I say it out loud? Flag and high. That's true. Vol is pretty high, and it's an expensive stock. So you're going to find that you're having to go so far out of the money just to get some affordable options, or a spread, 480, 490, bull call spread, something like that's going to be manageable, give you a good reward to risk, keep the cost down a little bit. That's a thought for sure. I like that. Let's keep going. Netflix, we said no. NVIDIA starting into a flag style position. Palantir recovering. I'm no longer. I was like, ooh, I would think of shortening it. Nope, not anymore. The Qs looking strong. Technology, do your thing. Rocket Lab overextended. Raw stores grinding still. RTX continuing its sell-off. What about Tesla? Oh, bear with me just a moment. I'm almost there. It's on the list. Silver, no. The digital stores look like they could have something brewing, but you have earnings coming up. The market is holding on to almost a 1% gain. Here's another digital store, still strong. Let me jump to Tesla here. Tesla is reporting earnings, I believe, this afternoon. So I would say Tesla looks like it's flagging. There's the poll. And here's the flag. Ish, right? You can kind of see that. However, it's not reporting until aftermarket, as Peter just said. And so Tesla to me is let's wait and see what earnings does and how it reacts, and then we'll see from there. TSM looks great. This is definite. Now, this is less a flag and more of a pennant. What's the difference? I mean, if it looked like that, it's a flag. But we happen to have this one day here, so now it makes it a pennant. That's the difference. Not a big deal. Same exact premise and analysis underlying what we're looking for here. So where do we see opportunity? TSM, MU in chip space, which is obviously tech. We see it in Google and Meta, which is in the tech adjacent communication services space. Couple of them look good today. Couple of them look like they're close. So yeah, I think we've got some stuff brewing. Thoughts, questions, comments, concerns? Uh, but things are pretty expensive, so be careful about that. UPS flagging. The Viking cruises. That looks interesting. Uh, there's the VIX rolling over a little bit. WDC overextended. Vodafone trying. Walmart. Okay. Yeah, we have opportunities brewing. Where are they? We know where they are. That TSM looks like it's, I was playing with it. The numbers looked good. Good reward to risk. There's a couple others that are coming. So, oh wait, Peter. Thank you for saying that. I appreciate it. It's good to see everybody. Let's go back and take one last peek. I'm super curious. Let's go take. Oh yes, look at that. Look at that. As I said, we may have witnessed the high altogether. That might have been the worst part of what you saw. And now you may have a new reference point where you say, you know what? There's my new threshold. And all of a sudden, things got much more manageable. And then if it can break this one, then you really start to see this thing pay off. Anyway, great to see everybody. Schedule. Tomorrow morning is Glenn. Tomorrow evening, both of us will have a Q&A session. It's great to see everybody. Everything looks good as we're expecting. So looking for more opportunities. Have a great rest of your day. As always, happy trading.